What's up, YouTube? Welcome back. Today's video is going to be for the new ones, the people that have just joined the market. There's been a huge just influx of people joining the markets. There's been a lot of media hype. There's definitely been an acceleration in technology and zero commissions, just really make the markets that much more accessible. Now, when it comes to risk management, arguably the most important thing of the stock market. What keeps you from just losing? There's a million ways to do it wrong. I'm going to teach you the correct way to do it in this video. Some of you guys, if you've been following me for a while, you guys know what you're about to hear. The 1% stop loss, the correct way. How to actually do it. Now, traders love to talk about this 1% stop loss. I only risk 1%, and they're doing it just wildly wrong. Like, they have no idea what they're doing. You'll have people jump in the markets and say, I got in at this price, but for the sake of risk management, I only put in 20% of my account. Or I only risked $2,000. I put in $2,000 on this particular one. I have a $20,000 account, so I only bought $2,000. Now, going in and just betting small is not risk management. That's going to the blackjack table and playing the minimum bet, right? Your odds don't change. Your trading probably still sucks. You'll just lose a little bit at a time, many more times. It's just, that's all. Another popular one, people will give it 1% of the actual stock move. Now let's go to something that actually moves. This one's pretty red right now. Let's go to Tesla. Let's say you bought right here. You thought that was the support, intraday support, whatever, whoever you follow, whatever their reasoning is, they thought that was the buy right there. Without even looking at numbers. There you go. So there's your one. So you bought. Let's zoom in a little bit. So if they bought right there, around the support, we'll go this one candle down. Now, oops, there goes from there to there, 1% of the ticker. Now they just tagged out at the bottom, likely selling me their shares, and then it rises back up and you're wrong. And you'll be very annoyed because you'll do that a lot in the stock market. No matter what strategy you follow, on anything, when things are volatile or moving around a lot, there's the potential you tag out, it turns around. But we put these stop losses in place so we don't catch just that crash. These are the safety nets. These are the airbags, the protection in case of a crash. If anyone knew where things were going, we wouldn't have stop losses. I'm very confident in my ability to trade, but I have stop losses for a reason. I'm not blind to the fact that I might not be right. So it's important to have these on there. So I'm going to teach you guys the correct way to do it and how to actually manage risk the right way. Now, if you follow me, you guys know I do zones. So I like to find the buyers, then we look for sellers right here. Now, every trade, not some, not the majority, not most, every trade, entry, stop loss, I'm going to get out. Now, who cares about the ticker? Ignore the ticker, ignore the price. We're out here on a blank screen. We got take profit right here. Okay, every trade, where am I going to get in? Here. Where am I going to get out? Where am I wrong? Fibonacci people, the Elliot's cousin, whatever indicator you're using, whatever strategy you're using, it has a directional bias. It's going to do this. This red line that's broken. It's not doing that anymore. My plan, obviously not the one in play. Time to get out and reevaluate. That's the stop loss price. Red line. Okay, I haven't said anything about the price. I'm looking at the charts for this. Candles say that's where the buyer should be, and if they're not there, neither am I. Now, take profit. Now we can draw that green line and we can talk about any fallacy, any imaginary number you want to the moon. But realistically, if it's not at all-time highs right now, there's a price up there. Now, is the juice worth the squeeze? If we're going zone to zone like that, does the trade really make sense right here? Does it make, if I think we're going to here, but my risk is still down here, is that worth it to me? Probably not. With over 8,000 tickers I can trade from, there's probably a better one out there. So now, looking at this, we're going to risk 1% of our account. Now, TradingView makes this very easy for you guys. This is tradingview.com. Now, click this. Click the little arrow. This is going long. This is going short. Very popular subject right now. So to go long, we're going to do entry here, stop loss here, take profit here. Now, I'm going to show you what these are. Let's pretend you have a $10,000 account. Okay, we're going to risk. So $100 will be 1%. You can actually change it to 1% if you want. So let's grab that right here. Now, again, 1% stop loss the correct way. It doesn't need to be 1%. It could be $100 like you said. It could be $500. You have so much at risk that you are losing sleep at night. Too high. Now there's so little, you don't care. You're going to the blackjack table to bet $1. I don't care if I get a blackjack or bust. It was $1. I'm probably there for conversation, or I don't know why I would even be there, right? I don't care. You need to find that in between. You need to pay attention, but be comfortable. Now, because I like these zones, I like to enter type 1, type 2, type 3. I have a video called Perfect Entry Types explaining just that in a little more detail. But you'll notice my entry changes around. My risk does not. That stop loss, that line right there, was from the charts. That's where it stays. Not my opinion, not my feelers, not yours. The market doesn't know you exist. It doesn't care about you. There's nothing about this that knows. You can complain till you're blue in the face. You can cry till you run out of tears. No one cares or will even hear you. Don't forget that. So, the candles, the chart is where you grab all of these numbers. Now, I only want to risk $100. So, you get in here, stop out here, take profit here. Let's do another long position. Right here. We're going to stop loss right here, take profit up here. Let's exaggerate. Let's grab the top of that zone. Top of that zone, stop is still the same. You know what, let's even get a little bit earlier. We're a little excited. We're a little amped up about this. Maybe some good news just came out. I don't know if I want to wait for that. Okay. Risk still the same. We are going to risk the same. We're going to lose $100 on each trade. We're going to get in here. We're going to buy 2 shares. We're going to lose about $80 on this one because we can't afford a third one. We're going to buy 2 shares. This is, I think that's a 3.3 to 9 to 1 ratio. There's the golden ratio, by the way, guys. Like, I only grab 4 to 1, 10 to 1, whatever. I could put that take profit number at a 5,000 to 1. Again, be realistic. There's trades I take that are 50-50 all the time, but it's in my favor and maybe an 80% probability. So yeah, I'll take that. Now we're playing probabilities. Again, strategies are different. This is going to be for everybody, no matter what the strategy or indicator you have. But look here, pay attention. We're going to buy 2 shares because from here to here, what is that? So we're buying it at 1,000, we'll say 1,070 to 1,030. So it's $40. $40 per share. If I only want to risk $40, I'm only going to buy 1 share. You picking up? Now look at this. So because I only want to risk that same amount, $100, I'm only going to buy 2 shares. Now my stop loss is still the same, but now look. 4 shares. I'm only going to risk the same amount, but because that movement is so much smaller, it doesn't need to move as much. I can squeeze some more shares in, which is why you guys always see me grabbing those bottom ones. I like that you could squeeze more. It doesn't have to move as much. There's not a lot of brain power. It's going to turn around or it's not. Again, as a trader, you need to stay in your lane. Some people, they can do this. I can do this all day long. I buy bright red candles. I like to buy the red ones and sell the green ones. But some people, they'll jump in and they'll tag out, and that just destroys them for the day. This is a psychological game, so know your lane. If you want to wait for that reversal and it's already turning around, grab it on the way back up. You know, the train's going to go from A to B. You don't need to be the first one on the train. You just need to be on the train. You want to take advantage of some of that move. So, again, what's your entry? What's your stop loss? Is it $10 per share and you only want to risk $100? Then you're only going to buy 10 shares. Okay? Base everything off the charts and then adjust your shares according to your risk. Not this, I only risk a certain percentage of my account, or I only do this or that, and we'll roll the dice and we'll see how much I lost on the other end. This is not a leap of faith. This is calculated. treat it as a business, and that's how you manage risk. So I'll keep it. You know what? Let's jump into some live examples. We've done the blank chart. Let's go to what's a popular one that's not I haven't charted up. Etsy. I wouldn't take this trade actually because it looks like we are just shy of a zone. If I was paying attention to this, I would have been right here. Take profit likely would have been up here. We're looking for buyers, looking for sellers. They failed. There's no follow through. They're actually breaking through and retesting this. But let's say you use support and resistance. You whatever you want to talk about. Let's find our 3 lines. There's your entry. Let's say you don't want that breaking. There's your support. Should not break that. So here is your stop loss. Right to the T. Let's even give that some wiggle room. You give it some leeway. Sure. Okay, and you see that on the top. There's your take profit. This is why a lot of beginner traders can do halfway decent with support and resistance. You don't know why it's doing that, but hey, there's the high, there's the low. Here's where we're at, so you can make that trade. Now, let's say that's what you want to do. Here's your entry. Here's your stop loss. We get in here. We only want to risk $100. So look. We're going to buy 9 shares. We're going to enter here. We're only going to buy 9 shares. If that tags, I still have $9,908 in my account. Here's my take profit. Out of my $10,000 account, I will now have $10,244. Now, don't just draw that number up there. What I don't want you guys to do with this tool is do this and think, oh my gosh, I could make $500. It just needs to go there. Don't kid yourself with this number. You need to focus on this number, and does that fit your risk tolerance? Make sure this is at a realistic number anyway, because especially if you're following my strategy, we're going to delete that. We're going to move our stop loss up. We're going to trail this. We're going to trail this right here. If it makes sense, we're going to buy some more in this zone, and then you know what? We're going to trail it some more and trail it some more. We're going to bag hold the winners and cut the losers, right? Once that stop loss is in place, it's in place. It's not moving. It only goes up like a ratchet. So, bag hold the winners, not the losers. If you're part of the notification squad, don't copy that trade. We're actually just below this, and tagging that from underneath. So I wouldn't take that. But if it gapped up, I probably would. Now, if this actually gapped up, realistically, I would take this trade. Monday morning, we gap up. Futures are green. We're rocking and rolling. I'd stop out realistically 193.45. That's where I like that number. Take profit would be right here. Now, my account is not 10,000. So I only want to risk. Now I'll buy 265 shares. I'll stop out right here. We'll take profit right up here. Now, whether you jump on TradingView and use this tool, or you just make the simple math real quick. Okay? How much per share is my entry to stop loss? $10, $3, right? How much do you want to risk? 1,000? Okay, put that stop loss $100 away. Buy 10 shares. Give that thing plenty of wiggle room. This strategy scales. Let's say you're on the 1 minute. Ooh, let's get real controversial. Popular strategy. One day, 1 minute. We're on the what's it called? The VWAP. We got it. We got all 3 lines. This will show. TOS has the 3 lines. You know what really shows that though? Bollinger Bands. They're pretty close. What is that? No. Hang on. Let's try that again. There we go. Let's get that out of here. Okay, 1 day, 1 minute. Pretend this is the VWAP. Brag that you're paying above the average price everyone else paid. But look, you're going to get in here. We're on the 1 minute time frame now. Okay. Maybe we're bull flagging it up. We're rejecting that. Maybe your strategy's not. Maybe you wait for it to get above here. It gaps above. We're above the VWAP. This would be a picture perfect. It's never a strategy I would do. But you don't want it making any new lows. So you're going to stop out right there. I don't know what your imaginary take profit is on a VWAP. Shoot. I don't know. Let's just pretend you had an imaginary number in there, I guess. Sorry. Okay. Old support, new resistance. So you got it right there. Okay, you still have your entry, your stop loss, your take profit. Okay, now I get to buy 3,900 shares because my risk it still fits in my risk. Now, whether you can afford that many shares or not, like you put that thing real close. You know, the closer you put that, probably the more likely it is going to tag out. So remember that. You don't want to die death of 1,000 cuts. You want that to make sense. But again, that's why I love type 2s. I can buy as many as I want. I realistically would never buy 3,900 shares, but I could if I wanted to, if that was my stop loss right here. Now, let's jump out because the markets are absolutely crazy. Let's say they're volatile. You know they are, especially if you're watching this any recent time right now. Let's get on the weekly. Okay, well, we're on the weekly time frame now. Now look how many shares I'm going to buy. So we're gonna zone this out. We'll do my strategy. We're basing out supply and demand, so we're going to go long. We're going to grab our entry somewhere right inside here. Our stop loss is going to be right here. My take profit. Do we have one previously? Let's just use that for example. That's all-time highs. It's a completely different strategy, but let's say we had this as a resistance. Okay. Now look how many shares I'm buying. 172. Because it's a higher time frame, I have a much wider stop. My risk is still the same. I can scale this to any time frame, any strategy. This is the proper way to manage risk. So 1 day, 1 minute. Go down to the 30-second chart. I don't care. Go to the monthly chart. You know, you're just going to naturally give it a wider stop, which means smaller shares. You take advantage of a bigger move. Think of that 1 day, 1 minute strategy we just touched on. Think how many greens and red candles. They were up, down, up, down, up, down, all over the board. But it stayed within your risk parameters. And then as it pushes up, we can trail it and do whatever your management strategy is in between. It is never a set and forget. It is always a set and manage. So, again, entry, stop loss. How much per share is that? How many shares can I buy and fit my risk tolerance? Risk tolerance is personal to you. How much can you risk on that one bet? We're at the blackjack table now. How much are you going to throw out there? Not want to throw the stool at the dealer, but still enough that you're borderline thinking, should I count some cards? You know, you want to be right there in the middle. I'll end that here for you guys. Hopefully that helps some of you guys out. Brand new to the market. Use that to whatever strategy you have. Use that to manage your risk. Don't do this blind. Make sure every one of these has all three of those numbers, every trade. And I will see you in the next video.